All right, good day, everyone, and we are live. Welcome to another edition of Rogue Mornings. And today's guest is Ken Schortgen Jr. Of Shotgun Economics, by far one of the best writers, the best podcasters out there in regards to everything economic, geopolitical, politics. I listen to every one of his podcasts every single day that he puts it out, if not the next day. So I'm very delighted. And everyone knows Ken. People usually say, "Where's Ken? Where's Ken been lately?" and everything. So it's great to have you this morning. So Ken, welcome to Rogue Mornings.
Morning, CJ, and glad to be here.
Awesome, very good. And before we jump into things, real quickly, just want to thank our sponsors, mycbedibles.com. Go check it out. Remain calm. I'm not sure where these guys have been. I need to get a hold of them today and see when they want to do a show for the Crypto School, which is at the cryptoschool.io. And then also liquidbase.io as well. So, but let's jump into it because there's a lot to discuss. Ken, the last couple of podcasts, you've been really detailing out some of the economic numbers, the financial backgrounds of what's happening, in particular to this the best Dow that we've seen in a long time, the longest bull market that we've been in. What are your thoughts on that, Ken?
Yeah, I think it's either tomorrow or Thursday, we'll suddenly have the longest bull market in history, particularly the S&P. You take a look today, the Dow is back up 71 points to 25,830. It reached an all-time high about, I think, December of last year, January this year. It reached that all-time high, and it looked like it was running similar to what happened in 2007, because in 2007 the Dow had gotten to 14,100, and then it started. That was the peak, and it sort of had a 10% correction. It floundered around at the 11,000 mark, and I believe it was that 11,000 mark when we hit the crash of down 777 points. If you remember, in February, we had the volatility play, which really was just a bunch of oversold volatility, the VIX, and that caused at one point to go down about 15-18%, not quite bull market territory. Sure enough, in that amount of time, from 23,000, we're back almost at 26,000. And it reminds me of the fact that most of the time when inflation is kicking in, whether it's Zimbabwe, most people don't realize that when Zimbabwe was in hyperinflation, they had the highest stock market, equity markets in Africa. Venezuela and Argentina, both during their hyperinflation, had the highest equity markets, because if you can't afford to buy a couple eggs, then you might as well put your money in stocks.
Yeah, absolutely. I completely agree, and it just continues to be touted, but yet it's kind of odd because here, and again, I sound like a broken record because I've said this, I think, the last 2 or 3 shows, that we keep hyping this up and talking about this stock market, and obviously we know that it's rigged, but yet we're putting a lot of pressure on the Federal Reserve to keep rates low, to keep the politics out of the Federal Reserve, where now they're considering tapering back and not have any type of Fed increases. Just really mixed signals out there, Ken. And then you complicate that by the trade wars, the tariffs, and all those things. What are your thoughts on the administration's? There any type of thoughts on the trade wars, the tariffs, all those things, on how specifically that may impact the economy?
Well, that's a sort of complicated thing. We'll break that down, obviously, but here's the scoop. Starting back at Bush years, or I should say Clinton years, and the Bush and the Obama, they could care less about growing the American economy. It was all about engineering globalism, trying to culminate with TPP and TPIP so that multinational corporations were even above sovereign nations. In that, what they did was they had this realization that they had to bring down the United States. That's why they offshored all our manufacturing and industry. That's why we started this big movement of debt, lending out to emerging markets, et cetera, building up China. The problem is that if you remember back in 2000, I think it was 2010, when we were in the midst of the Great Recession, Bernanke was sitting before the Senate in a hearing, and Chuck Schumer, when the Democrats owned both houses of Congress as well as the executive branch, he looked at Bernanke and said, "You need to get to work." What that did was there's two sides to policy. There's fiscal policy and there's monetary policy. The Fed has always been, since its inception, been in control of monetary policy. The money supply, expanding that, fighting inflation, unemployment, things like that. Fiscal policy deals with things like the tax breaks, regulation, that type of trade agreements. That is the purview of Congress, while the monetary policy to protect the value of the dollar has been the purview of the Federal Reserve or central banks in general. So in 2010, Schumer didn't want to have to deal with what was going on in the Great Recession, so he threw it in the Fed. This is exactly what's happening today, is because if some of the analysts are correct that the Fed wanted to use Obama's 8 years and then bring in Hillary, and for how many years she was going to be, to destroy the economy completely and transition into this new globalist one, then the Fed was going to go ahead and find a scapegoat, usually it's war, to go ahead and do this. Now, with the trade war and the tariffs, the Fed, and you can see them subtly, they came out about a week and a half ago, where about 4 different Fed presidents and governors came out and said, well, the economy's got the potential that it's going to slow down or possibly fall into recession because of the trade war and because of the tariffs. They're scapegoating and blaming Trump so that nobody looks at their policies, because, as I said, Schumer threw everything in the Fed's lap. Everything from 2010 to today is 100% the Fed's fault. Their policies have created the consequence that we are in today. That consequence is not just a all-time high stock market. That consequence is wealth disparity, where between the 1% and the 99%, no wage growth, low-paying jobs, and the fact that they haven't brought manufacturing back in. They've indebted everybody, where household debt is at $1.4 trillion for credit cards, the student loans. And now the student loans, it's a combination of two things. One, Obama took control of Sallie Mae back in 2010. And Sallie Mae is the underwriting backstop for student loans. So now the federal government is doing that, and when there's free money to go out, what happens? The Fed is giving free money to the government, selling as many treasuries as possible. We're backstopping it, and so that money goes to the universities. The universities have this free flow of money, and they jack up all the prices because they know they can do it. It's the same reason why our healthcare system is one of the most expensive in the world, because we backstop it with Medicare. We backstop the VA. We backstop everything. When there's free government money out there, it's going to artificially raise the price because there's no competition. Now, one of the more interesting things, and I wrote this article yesterday, the one of the things about the Fed is of course they are in charge of issuing bonds and doing bond auctions. This thing is an absolute scheme that perfectly works because the Fed is not interested in profit. As opposed to if you wanted to buy a bond with a certain amount of yield, why would anybody continue to buy bonds when the yield rate is below 3% and your inflation rate is 10%? You're giving your money to somebody for 10 years and you're losing 7% every year. I mean, that nobody in their right mind who has any fiscal responsibility, fiscal knowledge, would do that. But this is one of the things that the Fed does, is the Fed goes out, and when all these bonds are being dumped by China, Russia, China, whomever, The Fed is not allowing them to sell off in the regular market, the regular bond market, because if it did, there'd be more sellers than buyers, and the yields would spike to probably 5-6%. What the Fed is doing is they don't have to make a profit. They don't care about profit, so they're printing money out of thin air to scoop up all these trillion, probably several hundred billion to trillion over the last 3 or 4 years, and they're buying up and putting on their balance sheet. This is one of the reasons why I believe that the Fed removed from its St. Louis Fed database the live tracking of their balance sheet, because now they know that nations around the world are selling their bonds and their balance sheet is skyrocketing.
Yeah, absolutely, and it's interesting. You point out numerous things, but in part, a very important aspect is the future generations of potential earnings coming in. And when you take a look at that, you think of, I mean, shoot, look at social media now. The amount of people that are posting, "Hey, my son, daughter is going back to school," and all this kind of things that are being posted. But the massive amount of student debt right now, student loan debt that's accumulating, and nothing has really changed in regards to education, Ken. It's not like it's that much superior. They're coming out of school with much more knowledge than they had in the past, and it's alarming the amount of debt that these kids are walking out of. And why? Because we're so conditioned to believe. And I'm not saying that educate. I think I said very much I support education. My wife's an educator, but the debt and the government's role in providing educational institution this, charge what you want because these loans are going to be guaranteed, is just absolutely ridiculous. And it's just a shame. But then on the other side, we hear the socialists that say, well, college education should be completely free. It's like talking out of both sides of their mouths. You know what I'm saying, Ken?
Well, it's a number of things. The reason that Obama took over Sallie Mae and started pushing all this free college money, get that, is that in 2010, of course, we had, according to their numbers, 10%, 10.3% unemployment, which really meant 35% unemployment. So they needed a place for people to go so they wouldn't wouldn't rebel. You saw this rebellion start shortly after the 2008 financial crisis with Occupy Wall Street. Now, most of the individuals who were there really didn't know why they were there. They just had a feeling that something was wrong. And so they were protesting for the sake of protesting. But after a certain amount of weeks, a couple of weeks, it just became, like, hey, it's a homeless shelter in the park. But that, of course, led to the Tea Party revolution, which, during that time when the Democrats held both houses, and that, of course, led to the Ron Paul revolution. So you're moving more libertarian. And on the flip side, the progressives are moving much more tyrannical, communist, fascist, socialist, and even anarchist. If you think about it, the Antifa is a combination of anarchy and fascism. You take a look at Bernie Sanders. Bernie Sanders is just a more educated Alexandria Ocasio-Cortez. They really don't know what socialism is. Socialism, there is no such thing as communism. For anybody who has ever studied the true definition of communism, there is no government. There's no religion. There's no government. It's just people have this innate desire to be neighborly in partnership with each other and control the means of production. But it's never happened. Every communist society, whether it's China, Russia, Soviet Union, you name it, it is a socialistic oligarchy where a small group of people control the means of production. Well, that's exactly what TPP was meant to do, except instead of government officials, it was going to be corporations and board members. We have today, where in America, I'll say this straight out, our gut form of government is not democracy, it's not republicanism, it's fascism. And it's
Bingo.
Mussolini's fascism. It's where the merging of corporate and state because all you have to do is there was a Wall Street Journal and New York Times article back during the first government shutdown during the time of Obama. On the second day of the shutdown, he didn't invite Boehner, Speaker of the House. He didn't invite Harry Reid, the majority leader, to discuss and try to deal with this. No. On the second day of the first shutdown, 15 bank CEOs, JP Morgan, Goldman Sachs, Citigroup, Bank of America, 15 bank CEOs went to the White House. And what they were doing is telling Obama how this was going to go out. And this, of course, I believe was 2011. And shortly after, the raid on silver took place. That's what the government shutdown ended up really doing, is facilitating that raid on silver, along with a few other things. And Congress was completely shut out because this was a corporate determined outcome for the U.S. government during that debt crisis and shutdown. The other thing that people need to realize is that Social Security is completely bankrupt. Now, what evidence do we have is bankrupt? Back when Lou was the Treasury Secretary under Obama late in his term, during one of the government shutdowns, the one thing he said is that Social Security would still be paid, but if the government shutdown extended, then we would have to defer payments. Well, just because you have a shutdown doesn't mean you're not still getting your tax revenues. Everybody working still puts in their FICA and puts in their income tax, their withholding. That means that the money that was coming in was not enough to pay Social Security recipients, and they didn't have any money in the lockbox per se to do this. The shutdown kept them from borrowing money from the Fed to be able to pay Social Security monthly payments. So it's insolvent. It's already insolvent. The only reason that Social Security continues now is because they are allowed to still continue to borrow money. So all these little things that you see during these little crises, these semi-crises, they lay open exactly how insolvent the entire system is.
Yeah, no, you're right on the money. And Ken, there's a reason they specifically don't teach how money works in schools, right? They may teach macroeconomics, supply, demand, all that kind of good stuff. And I think most people, gosh, I hate to paint with such a broad brush, but people understanding money and how money works, and even growing up and as of recent years, I hear this constant statement, well, that can't happen because we can just print money. We can just print money and everything's going to be fine. And there's still, I think if you went out and took a poll, I think there's a good portion of society that still believes that our government, our Fed, we can just print money and everything's going to be okay. But now we're witnessing in this article that you wrote in regards to Treasury bond, we could probably make a whole show talking about money and how it works. But why don't you talk a little bit specifically around bonds and why a lot of countries, Russia, China, are dumping the bonds, and what that impact that's going to have to us here in the United States, Ken?
Well, the biggest change that has taken place there, it's a combination of change, and it's happened from about 2013 forward, because the United States has control over the reserve currency, going back to Bretton Woods and then even the petrodollar system, is that the United States uses the dollar both as a economic and foreign policy weapon. They should not get away. The first Iran sanctions that took place a little more than a decade ago were by the United Nations. It was a joint voted thing. These current sanctions are being U.S. only. It's the same thing, the sanctions against Russia, U.S. only. Okay, an individual country should not be allowed at all to impose sanctions and then enforce others to follow, i.e. what they did with Europe. If you don't enforce these sanctions against Russia, then we're going to affect you with SWIFT. If you don't enforce sanctions against Iran, we're going to affect you with SWIFT. Well, in 2013, of course, we had the first, Russia saw this, And so they started making agreements with China to start selling oil in currencies other than the dollar. The reason that Russia is selling treasuries and dumping their dollars completely is because of the sanctions. It limits the scope of which the United States can impose economic warfare on a country. And so it's all about de-dollarizing. This is what Iran's doing. Iran first is in the process of talking with Russia for bilateral trade. They are also in the process of ordering that all trade partners in the future, and since Europe desperately needs to trade with Iran, they're going to do it in the euro. And then just yesterday, one of the finance ministers in Iran came out and said that they're going to see what they can do about no longer accepting the dollar in oil trade, i.e. through OPEC. So that de-dollarization is every time the United States tries to impose these sanctions on whatever country, that is creating the whole, really it's the Achilles heel and shooting him in the foot. The Achilles heel is this for the United States. They have vast power by being able to print the reserve currency and force other nations to have to use it as a medium of exchange in international trade. The Achilles heel is that the entire United States economy and financial system is propped up by their ability to print money and lend it out. If that ends, then the United States instantaneously becomes a third world country, at least until it can, remake itself. So that's why this transition is going through. It's similar to what happened, in 1913. We had a pure gold standard, and we had the Federal Reserve take place. The Federal Reserve was necessary because within a few years we were going to have World War I. That was already planned. And from there, of course, Europe went through a massive recession. What did it do? The whole thing we're looking at now, we're in the second decade of the 21st century. During the second decade of the 20th century was a populist movement. Most people don't realize that World War I ended four empires. Four empires completely dissolved at the end of World War I. There was the Habsburg, which was the Austro-Hungarian. There was the one of Frederick the Great, Kaiser Wilhelm. There was the Russian Empire of the Tsars, and then the Ottoman Empire dissolved. We had the rise of Serbia, Czechoslovakia, Poland. We had the creation of all these states. This is why when we see this populist movement that's going on, it's something that has happened. Back in the 1800s, we had Napoleonic Wars, and that, of course, led to a lot of change when that ended. The second decade of every century is like a populist movement and an area of chaos.
Wow.
Unfortunately, it's both economic in some aspects, and it's also war. The one thing we haven't had so far is the war. But the big difference this time is that the empires, unlike Germany, who Kaiser was a warmonger, Britain never met a war that it didn't want to fight. The Ottoman Empire was the sick man of Europe. They were desperate. Austro-Hungarian had just had its heir to the throne assassinated. They were in the mood for war. Everybody was willing to go to war. Today, Russia and China don't want to go to war. And so this is why the United States is having to use economic warfare to do this, because one, Russia and China are bigger than, say, the United States and whatever European allies they can cobble together through NATO. The U.S., the thing is the U.S. wouldn't lose a war. They wouldn't win. Everybody would lose. That's what having nuclear weapons would do.
Yeah.
But with that being said, in the methodology that the Russia and China are doing is, we're not going to fight you. We're going to isolate you. And by ditching the dollar and by cultivating like China's doing in Africa. I mean, you remember a few years ago where Rwanda was like in a genocidal war, and it was just absolutely, under extreme conditions. You had the George Clooney's of the world coming out there doing his little, PAs about Rwanda.
Yeah,
If you
yeah.
take a look at Rwanda, Rwanda is suddenly becoming a metropolis. And it's all because of China. Why doesn't the United States go out and build and develop instead of destroy, like in Iraq, Afghanistan, and Syria? Because the United States doesn't care about partners. It cares about dominance. That's what the deep state really is about. It's not America or Americans in general. It's that shadow government that has been culminating all of this, the Ukraine coup. When you're run by a foreigner in George Soros, like many in the Democratic Party, many in the Republican Party, many in the bureaucratic offices of the FBI, the CIA, et cetera, et cetera. When you're being run by corporate entities, I said we're a fascist government, then this is what you get. It's all about dominance, control, and money. Now, one of the more fascinating things, I always wondered why nobody ever brought this up, especially when the mainstream media. They have the audacity to claim that that Crimea is not Russian. My response is, how quickly you forget your Lord Tennyson and the Charge of the Light Brigade. That poem was about Britain trying to take the Crimean Peninsula from Russia in the 19th century. It's always been,
And no one mentions that.
by the way, Crimea was originally an Ottoman Empire peninsula that Russia took. And I believe it was Ivan the Terrible who took it from the Mongolians or from the Ottomans or something like that. So they've had it for 500 years. But it's become a standpoint. Most of the sanctions are tied to Crimea voting to move back into Russian territory because they've always been Russian. And yet these are the things that are used as political moves rather than to try to bring about a world. And this is the other thing. When a nation is financially bankrupt, as Gerald Celente says, they go to war. That's why you're seeing the attempt at a war, at instilling war, because they know deep down that the entire financial system died in 2008, and all that the QE and all this money printing has done is the equivalent of putting a brain dead body in a respirator and still pumping oxygen and artificially stimulating the heart.
I completely agree, Ken. And for the majority of people who think that in regards to the US and our banks, US banks and their money, the deposits that they have in there, Turkey's a great example. So typically when there's a currency crisis, things have happened. Ken, what usually happens during those scenarios? I mean, there's usually, a rush on the banks. Usually there's tie-in. Most people don't understand specifically how that works. And we've seen recently a couple of examples, Venezuela being one, and then also in Turkey with their recent, currency crisis. And Turkey very well could be like one of those potential flashpoints. Now, the U.S. media will have you believe that this main, issue with Turkey is in regards to this Christian minister in Turkey, and that's the whole reason that we're willing to go to war with them. But why don't you break that down for a little bit for us, please?
No, the pastor is a canard. It's a false flag there. The whole thing is because Turkey is pivoting to Russia. That's the only reason that we're going after Turkey. Now, here's the thing. After 2010, during the Great Recession, there was nothing for these banks that were getting this cheap money at 0% interest rates to invest in Europe or in the United States. So they started lending money and investing in emerging markets. This is why the BRICS nations, the emerging markets, they became the BRICS. That's where a lot of the growth came while the West was in Great Recession. I've heard estimates between 14 and 17 trillion dollars in dollar denominations were invested or lent out to the emerging markets. This is the key. Okay. With the dollar strengthening, if you notice, it's the dollar strengthening from 89, 88, about 6, 7 months ago, to
Yeah.
it's now near 97. On last Wednesday, it nearly touched 97.
Yep. Yep.
Um, it's been since about 2010, 2012. It's been 5 to 6, 7 years. Those loans are being due. Well, if the dollar strengthens, that means these currencies in these emerging market countries are devaluing. They're less against the dollar. But the loans are made in dollars. So they have to go out and spend more currency to buy dollars just to pay back these loans. They can't do it. The world is going into recession right now, so it's not like they have the growth to be able to cover this. And thus you have the emerging market, what you're seeing in Turkey, what you're seeing in Argentina. Argentina and Venezuela are two separate birds. Argentina has been back and forth between hyperinflation and whatever in several times since the 90s. Why? I'm not going to say that South American and Central American countries are more corrupt than the United States, but the big difference is that the corruption is mostly at the top in the U.S., i.e., Wall Street, the corporations, and the government. The intrinsic corruption isn't necessarily with the people, but unfortunately, in places like Venezuela, Argentina, Brazil, corruption is institutional. I mean, if you were to travel down to Mexico to, say, Baja, or to Penasco, to Rocky Point, chances are that you're going to get pulled over for no real reason by the federales, and you got to pay a bribe. I mean, it's institutional.
Right.
The government's working with the cartels. Now, this new president is trying to stop this, but it's so saturated that it's really difficult to do. This is why they keep going back and forth into if you take a look at one of the biggest jokes I like to say is they love to have Mexican Independence Day. Well, which one? In the last 250, 300 years, they've had 5 revolutions. So, but with that being said, Turkey has been taken over by a despot. It's no different than Italy was taken over by Mussolini. Turkey has been a vassal state of the United States going back to the Cold War. Matter of fact, Turkey was intrinsic to the Cuban Missile Crisis, because what ended up happening is, after the negotiations, Russia was going to pull out any missiles they may have had in Cuba, and the U.S. pulled out their missiles from Turkey that were aimed at the Soviet Union. So Turkey has been that linchpin. And if you think about it, Turkey is the gateway from east to west. It's less than a mile between the Bosphorus Strait from Turkey to Greece. Turkey, of course, is just right there into Russia, into Central Asia, into the Middle East. Turkey is the gateway. It's one of the most important geopolitical and geographical places on the earth. And that's why it's of significant importance. So with Turkey pivoting into east, over to east, the United States loses a vastly important geopolitical location to be able to wage war and control Central Asia and move into, against Russia, et cetera, et cetera. This is one of the reasons why NATO is suddenly putting so many troops on the border of Finland and the Scandinavian countries.
Yeah, absolutely. Ken, let's shift gears a little bit and let's talk about specifically here in the U.S. Now, I know that you've continued to document it in regards to the pension crisis that's occurring. And again, there's continued cracks, a few states that come to mind. But I mean, gosh, we've seen, perhaps cities, municipalities that have needed, state level assistance, but not to the tune where now the federal government is actively looking at these pensions in these states and what are they going to do? Is there any updates, or do you have any information in regards to the pension crisis? They want to call it fake news, that there's actually a pension crisis occurring in the U.S., but there is indeed, right?
Oh, there's been a pension crisis for a while, but yeah, I mean, the thing about it is you've got to take a look at what the Fed has done. The Fed has made it so that these pension funds cannot use historic vehicles to earn money, to grow, to be able to pay these things. It used to be you could get 6 or 7% for a bond, municipal bond, for a corporate bond, for a treasury, for an annuity. These were the type of vehicles because they were safe and they gave you a good yield and they were able to keep up with inflation. But when you expand the money supply, like the Fed has done since 2010, this is why, according to Shadow Stats, we're at well over 10% inflation. Forget that 2.9% garbage. We're at 10% inflation annually. And we've been at 10% inflation. Matter of fact, I've got his chart up. We have been at 4% since 2014, and we have shot from 4% to about 10.3% in just the last 4 years. So inflation now, and this is why the Fed is tightening. The Fed is tightening because they know the history of stagflation. And that's what we're in. We're in stagflation. For those who don't know, stagnant or stagflation is a stagnant economy with rising inflation. And interestingly enough, in the 1970s, it also means that you have high employment. High employment, wages aren't going, but prices are shooting through the roof. Well, what ended up having to happen to stop inflation? In 1979, the interest rates were already at 7.5%. Volcker was the president of the New York Fed in '79, and he got them to raise interest rates to 9.5%. That was 9.5%, but inflation was at 13%. At 9.5%, they still couldn't halt inflation. It was still rising. This is why when he became the head of the entire Fed, he went in and jacked up the rates over the next 2 years to 21%. That's how you killed the inflation. Guess what? We are sitting at not even 2%. We're at 10% inflation, but only 2%. And because of this, back in Reagan years, the national debt was only $500 billion. So you could afford to raise interest rates because they weren't borrowing as much. Now we're having deficits that are at least 1 trillion to 1.4 trillion. We've got $21 trillion, give or take, that has to be rolled over about every 5 years. Every 1% that the Fed raises interest rates is approximately $225 billion out of the budget just on interest payments alone. So imagine if we were to try to raise the interest rates up to about 7-8%. That's an additional 6% times 225. That's about $1.5 trillion in interest rates on our already budget that we're borrowing 1.4 trillion just to sustain. So when it comes to the pension funds, their only thing they could do was to go to the stock markets, because the Fed's propping up the stock markets against their mandate. If Trump really wanted to, he could go to court about the Fed because they're propping up the stock markets. That's not in their mandate. They are breaking the law. But as I said, fascism, the corporations run the government, not vice versa. So the pension funds are reliant upon the stock markets, and the stock markets are propped up with 4 or 5 stocks. The FANG stocks pretty much run NASDAQ and the S&P. If you take a look, something like 80% of all stocks are actually in the red now for the year, for the last several years.
Wow, you said 80%?
80%.
Wow.
Yeah, 4 stocks are doing it. What's saving the stock market in this is take a look at volume. 75% of all trades are being done by high-frequency trading computers, not retail investors, not anybody else. People don't have any money. As I mentioned, they're already in debt, $1.4 trillion for credit cards. Their wages aren't going up, and they've got they're not playing the stock market. It's stock buybacks. And then if anybody wants to go see some of the previous videos over the past month by Lynette Zhang, she does a weekly update of all the corporate buybacks by the insiders, or the insider selling and the corporate buybacks. And it's one of those old saying: if you're going to invest in a company, you want to see what the insider is doing. Are the insiders buying stock in their own company because they believe it's going to go up, or are they selling? What's that old saying? If you want to be rich, you do what the rich do. Who's one of the richest men in America? Warren Buffett. Warren Buffett isn't buying jack squat. He's sitting on cash. There's nothing of value to buy. It's the same thing with these companies. The insiders are selling because all the money that they make borrowing at low interest rates is they're doing stock buybacks because there is no growth. If they didn't do the stock buybacks to manipulate their price to earnings ratio of their shares, then their stock prices would absolutely collapse because their revenues would lose to expectations.
Right.
The whole thing is just a manipulation and a watered down. And you have, if one thing I would suggest is there was a great article / white paper that was written by a university professor over the past month or 2 months. And he said that there is a natural law called reversion to the mean. What does that mean? That means in nature, if an ecological system is allowed to just function as it is, it's going to have a natural equilibrium balance. Trees are going to grow. You're going to have animals are going to prosper in that until it gets to a point where there's too many and the resources in that local area are overextended. Well, there's another way to really screw up an ecological system. Introduce something that is not natural to the system, i.e. what they did in Idaho by taking this endangered, huge gray wolf and putting him in an ecosystem there in Idaho, which they haven't been in 1,000 years. And what ended up happening? Within a decade, all of the animals in that were gone. These wolves were predators who pretty much destroyed the entire ecosystem. Okay, this is exactly what's happening in the financial system. When you put excess money into something, you artificially prop up things that are beyond their normal balance. In nature, when it gets to that point that the ecosystem is out of balance, it will force itself back to the mean. This is what it did in 2008. The stock market got to a high of 14,100, and in the midst of the Great Recession in 2009, the stock market was at 6,600. We are now almost double what 14,000 is. We're at 25,800. All of that is propped up in just the past 4 years with all of this money, all these stock buybacks, etc. What's going to happen when they can no longer fuel it? It's going to revert to the mean. The stock market is going to go back to below 10,000. Once it goes below 10,000, for all these pension funds that have invested in stocks, you think that they're being 60% or 40% underfunded is bad? How about being 70, 80% underfunded? And most of these are municipal and state-run pension funds, unlike the private ones that are protected by the Pension Guarantee Corporation. No, state and local ones that are controlled by the state don't have that backup.
Ken, we haven't talked about the metals or cryptos, but also very important for our listeners. And you can decide, this is your call, but in regards to what you've experienced with the amount of work that you've had to change with shotgun economics, shifting away. Which would you rather talk about? Because again, I truly enjoy your work. I really want to support it properly. So part of me thinks that our audience needs to understand specifically, what happened and why you need you need their help right now to help, to promote your work and all that kind of good stuff. So you take it where you want to go.
Yeah. Let's talk about cryptocurrencies real quick.
Okay, cool.
Um, from day one, I've treated cryptocurrencies as you would any speculative investment, speculative asset. I've not thought that it's money, because I looked at it this way. If I'm not a supporter of an unbacked fiat currency, why would I be a supporter of an unbacked digital form of money? But with that being said, since most investments are paper traded, it's just paper, you're not actually buying a thing, there is profit to be made in trading in a digital security like cryptocurrencies. Last year, of course, we had the cryptocurrency phenomenon, and I'm talking, this phenomenon was so great that the amount of gains for cryptocurrencies were the highest in history. There were some cryptocurrencies that had a 100,000% gain. 100,000%. Now think about it. If it doubles,
Wow.
it's 100%. Some were 100,000%. But you've got to understand what the American investor is. The American investor is not a value investor like Warren Buffett. They don't look at stocks or assets that are undervalued because everybody hates it, like the mining stocks, or in this case gold, and we'll touch on gold and silver here in a bit. But the fundamentals are absolutely fine. And the real money is made by investing in something that everybody hates because the price is undervalued and depressed, and you just wait for the cycle when everybody suddenly shifts to it. No, Americans are momentum traders. Momo. This is why nobody was buying Bitcoin in 2010, 2011, 2013. They all bought it in 2017 when the price started rising. I mean, you might know somebody who bought Bitcoin when it was 16, 17, $20,000. Well, guess what? They've lost 75% of their investment. Why? Because the sentiment shifted. People don't buy investments these days to hold. They buy it because of momentum. So, what's happened? Well, you take a look at Bitcoin. You can really move to that one day when everything changed. Everything changed. The all-time high for Bitcoin was December 17th, 2017. What happened on that day? The CME, Chicago Mercantile Exchange, approved the first paper traded futures contract for Bitcoin. Now, I've written articles that show, unequivocally using the blockchain data, 99% of all Bitcoin is owned by 1% of the wallets. Those who say that Bitcoin and other cryptocurrencies can not be manipulated because it's decentralized doesn't know the first thing about finance. If you own 51% of anything, you can manipulate the price.
Oh, absolutely.
Okay.
Absolutely.
This is why Mark Zuckerberg keeps more than 51% of the stock. He will never be voted out of his company. So with that being said, once the hedge funds in that came in, take a look at what's going on with gold, silver, or any commodity or futures contract. The most money is not gained by having it go rip-roaring high or rip-roaring low. The most money is gained by creating a range. And you skim money as it goes up, you buy the dip, skim money, and that's what the hedge funds and the rest of them are doing. This is why they try to keep gold and silver in a range, because they skim the money with billions of trades on their high-frequency trading computers, and that's what they do. They don't lose money because the risk is limited when things are in a range.
Oh, great. Yeah.
Now, when you take a look at the cryptocurrencies, there was an interesting article that I expounded upon a few weeks ago, that 80% of all cryptocurrencies are potentially going to disappear. Of the 1,800 or more that's been created, 90% are now less than a penny. 80% of those pretty much they're projects. They're these things that never went anywhere. They're going to disappear. So you got the potential. You're going to have a very small amount. I mean, let me give you a hint on the prices. Bitcoin from its all-time high down 70%, Ethereum down 82%, Ripple 93%, Bitcoin Cash 89%, Cardano 93%, Litecoin down 88%. These are extinction level events, because if you lose that much, you're going to have no volume. Momentum traders are not going to go into something that is falling in price. So you have a limited amount of people who are playing with it. Now, on the flip side, and I know you've got the trading room, day trading cryptocurrencies is absolutely fine if you know what you're doing. You can always skim profits no matter what. The penny stock market is there for a reason, and people make tons of money trading penny stocks that are between 0.0001 and 5-10 cents. Okay, there's a difference between investing and a difference between trading. And so what I'm talking about here is, if you know what you're doing and you know the right people and you have the right platforms, trading cryptocurrencies is something that is lucrative if you know what you're doing. Investing in cryptocurrencies, in my personal opinion, is meaningless, because take a look at the petro in Venezuela. Even the sovereign governments can't get that thing to take off the ground.
Correct. Yes. Yes.
Now, on gold and silver, I'll touch on that real quick.
Yeah, go for it.
One of the things people got to remember is the gold and silver markets are run by the paper, by the futures market. If you take a look at the COT report, the commitment of traders, it's at record number of short contracts, short interest. Secondly, right now, if you go to a coin shop, you're not paying $14.87 for an ounce of silver. You're still paying over $18, $19. They are not going to give you what the paper price is. The physical market and the paper market are disconnected. The amount of supply, and think about this too, 1550 is the break-even point for the silver industry. They're losing money now in production. Same thing with gold. I think 12 something was that. So unless you are an absolute efficient miner, you're losing money. At a certain point, they're going to cut off supply, and supplies are already stretched tighter than a drum. Go to Steve St. Angelo at SRS Rocco. He does fantastic work on showing the supply and what the real outlay of the physical market is. So for those who are worried about the paper markets and the gold price is down, the silver price is down, man, all you got to do is go back to 2008 when the entire system was collapsing. Gold was at 1,040 and it fell to 740. And within 3 years, it was at 1920. Because when we are in the emerging markets and that are in a liquidity crisis, they desperately need liquidity, because the trade war and these loans, these emerging market loans, and their recession is demanding that they got to cover these margins. So they're selling off anything they possibly can. And that's why you're seeing a lot of the paper markets fall by this, get depressed, because they're selling off all the paper so they can get cash to cover the liquidity. But when the currencies start losing confidence, like we're starting to see Turkey, Venezuela, Brazil, Argentina, etc., even China, they're going to move into one of two things. As we see in Turkey, 9% of the population has cryptocurrencies. We also see that many of them have gold. We see Germans are getting gold. Even UK has seen an uptick in gold. The physical gold market is still running pretty good. The paper gold market, forget it. So you've got to understand the difference between the two. And at a certain point, as I mentioned, reversion to the mean. All this depressed prices, knocking it down from 1920, when JP Morgan rated silver and gold back in 2011, depressing it to where it is now. That's going to explode back to new all-time highs in a short period of time once they lose control of that system.
Ken, great insights. Thank you so much, Ken, for a great interview, great show today. Please share with our audience, Ken, how they can learn more about your work, and then also your social handles, how they can follow Shotgun Economics, please.
Yeah, you can go to shotguneconomics.com. Fortunately, when I had to switch over from the old Daily Economist, I didn't lose any of my my articles and my work. So the website looks virtually the same. The name is a little bit different. The logos are different. On YouTube, just to look up Ken Schortgen, Schortgen. Fortunately, it was under that name and not the Daily Economist, so I didn't have to lose my YouTube channel. What I do every day when the markets close at 4 p.m. Eastern time is I do a market wrap up, and I go through all the different aspects of the market and certain news articles that are important to you. And if anybody wants to help out, especially with YouTube and Google Ads, going after pretty much cutting everybody, is I do have a donate, and if everybody just gave $1 a month, you know what? Everything would be covered, and it would be much appreciated.
Absolutely. Ken, thank you so much. Really appreciate it. For our listeners, please like, share, subscribe. Also visit roguenews.com and make sure you subscribe there as well. So this is CJ delivering another Rogue Mornings with our guest, Ken Schortgen Jr. of Shotgun Economics. Ken, thank you so much for being with us today.
Thanks again, CJ.
All right, everyone, we're signing out. Everyone enjoy your day. Thank you.